Good afternoon, good evening, wherever you are. Everybody, welcome to the Lion Cage. I'm broadcasting live from Ideas Cartel in Cape Town, which is a fantastic members club founded by Skylar Forster, a SMUTB. And one of the companies coming up now is broadcasting from Ideas Cartel. There are 3 in Cape Town. That's the other one. So welcome everybody, and thank you for joining us, members. And over to Chief Lion, Hans Otterling.
Thank you, Rob. Today we have Sun Exchange. Abraham is going to show us how you can make money on making the environment a better place. You can make money when the sun is shining. He has a stellar story about how he's building a solar power out across the globe, and particularly in South Africa. And after that, we have Jessica, who's been with us before, Yebo Fresh, presenting her business and her progress since we met her last time. So we're gonna let Abraham come on stage, and you take over and you run your show, Abraham. Good to see you.
And you, thank you very much. Can you hear me all okay?
Yes.
Okay, fantastic. So I shall begin. You can see my slides. Yeah, you can see my slides. Great. Hi, everyone. I'm Abe Cambridge, founder and CEO of Sun Exchange, and I'm very excited to be sharing a very fantastic growth opportunity for you all to invest in. Sun Exchange is an online platform that allows anyone in the world to purchase solar panels online and then lease them to businesses in emerging markets. We're closing a critical funding gap for solar energy by connecting organizations in emerging markets that want to benefit from being solar powered to individuals and entities globally who want to enjoy the financial and environmental benefits of owning solar panels. We are entering a hypergrowth stage, and to sustain this level of growth, we are raising a $3 million convertible note within the next 30 to 60 days. Our largest investor, Arch Emerging Market Partners, which is backed by Africa Rainbow Capital, is leading the note with $2 million already committed. So we are looking for $1 more million to complete this convertible note round. That convertible note will roll into our Series B round at the end of the year, which is a $10 million round. And that convertible note will give you a 17.5% discount into that Series B. And that note has a coupon of 11.25%, could be paid in kind, and has a 3-year term. Now, the use of proceeds is to enable us to continue the hockey stick growth that we are currently seeing. We need to capitalize, or we've got a $284 million pipeline of solar projects that wish to be sold through our platform, which includes a huge portfolio for a global telco to solar power their cell stations, data centers, and offices. We also need to meet the demand of a new US public solar fund, Energia, that's also just committed $5 million worth of funding to go into our projects. And of course, we need to continue developing the platform, refining it, and expanding the team to meet up with that demand. So Sun Exchange truly is a mission-driven organization. Our mission is to connect the world to the sun. And we envision a future where every person and business worldwide generates solar energy to offset their carbon footprint. And of course, that's all going to be done through the Sun Exchange platform. So what we actually do is anyone anywhere in the world can just log onto sunexchange.com and buy a solar panel and then lease them to businesses and schools and other organizations in sunny emerging markets. Now, we bill and collect the electricity payments from the energy consumers, and we distribute those payments back to solar cell owners via an integrated dashboard. The people buying the solar panels, the owners, can earn while making a positive impact, and the energy off-takers reduce their energy costs and carbon emissions, and together we create a more sustainable future for the planet. Now, the kinds of projects that you can solar power, or that anyone can solar power through the platform, are things that you use every day. So shopping malls, schools, retirement homes, wildlife parks, etc. Things that are really integral to a healthy economy, and things that we can all relate to. So just as an example, right now there's the latest crowd sale on Sun Exchange to solar power Nimbe Fresh, a very important part of Zimbabwe's cold chain. It's around $1 million solar plant by value. It's about 80% sold so far. You can just click buy solar cells and you can get involved with solar powering that fantastic business. Once your solar panels then get installed, your payments will be sent to you via either Bitcoin or in the local currency, South African Rand or US dollars, into your Sun Exchange wallet. You can also on your dashboard track your electricity production, your energy production against forecasts, and of course track your carbon reductions. Now, many people choose to earn in Bitcoin through our platform because it's the perfect place to start earning an income in this new currency of the internet, without being exposed to the perceived risks of investing directly into cryptocurrency. Also makes the platform truly global by having only one financial network to deal with. Now, as a platform, we have two main stakeholders. On one side, we've got solar cell buyers / owners, who are the sellers of electricity. On the other side of the equation, we have energy off-takers, the electricity purchasers. And the value proposition to people buying solar panels is that for as little as $5 and an internet connection, you can now own solar panels and produce electricity without even needing a roof. In doing so, you can earn a passive income while making a positive 20-year impact for the project that you're powering, directly reducing your carbon emissions, and you can track your emission reduction through the dashboard. Above all, you're part of something really meaningful, and you're joining a global community of inspired, like-minded individuals who are creating a more sustainable energy future. Your earnings can even be compounded by buying more solar panels from the earnings that you've got into your wallet, easily rolling over into new projects. Now, for energy off-takers, the electricity purchases, well, they get access to solar power at zero capital outlay. They get a reduced electricity tariff of sometimes up to 30% and at least 20% without any capital expenditure. So they're not putting any capital to work, they're saving money, and they can increase profitability. They're also helping clean their local air quality. As load shedding has hit South Africa, and anyone familiar with other major cities in Africa, which people running diesel generators, will be aware of the fumes and the bad air quality that they can produce. Businesses going solar immediately clean up their local environment, and they also get to demonstrate by going solar through Sun Exchange, being advertised to a global audience, that they get to demonstrate they care about not just profits, but their sustainability of their brand. Now, the time for this is absolutely perfect. I mean, BlackRock have just announced investments not just into Bitcoin, but also out of fossil fuels. So, I mean, impact investing and crypto are now going mainstream at the same time. Now, these are parallel trends that we're perfectly and uniquely positioned to capitalize on. When I started Sun Exchange in 2014, both cryptocurrency and impact investing were fringe ideas. And today, climate concerns are intensifying globally. The urgency of transitioning is growing. Solar power is now more economically viable than centralized grid power across Africa. There's $20 billion of commercial industrial solar installations needed in Africa, and solar developers almost unanimously cite the lack of access to financing as the biggest hurdle to faster growth. The global impact investing network now is valued at $715 billion, and ESG investments today stand at $12 trillion, a dramatic increase of 38% since 2016. And the most interesting stat is that for our platform users, 95% of millennials are only interested in impact investing. I'm now going to pass you over to Saul Wainwright, our Chief Financial Officer, who will run you through the historical figures of Sun Exchange since we began trading in 2016 and plot our growth forward over the next 5 years. Over to you, Saul.
Thanks, Abe. Back in 2016, Sun Exchange sold one project worth $15,000. Fast forward to 2020, and we have funded over 37 projects with a cumulative value of $5 million. In 2020 alone, we grew over 125%. This is despite the COVID-19 pandemic. We are seeing this growth trend accelerate into 2021, with January and February being our best revenue months ever. Across our platform, we're seeing increased customer spend and a growing global community. Currently, we are in 2 countries, South Africa and Zimbabwe. Our growth plan has us going into 10 countries by 2026, with the intention of capturing approximately 10% of the African commercial and industrial electricity market. We feel confident about this growth trajectory as it continues our current trend, doubling year over year, and the next 5 years will be driven by market expansion. This will result in us being EBITDA positive by the end of 2023, with a projected EBITDA in 2026 of over $80 million. How will the funds be used? We will accelerate our marketing efforts into the USA and Europe. To date, we have spent less than $500,000. We'll invest in platform enhancements and our global expansion, funding our land and expand strategy as we enter new markets across Africa and beyond. The remaining balance will be used as part of our working capital. Over to you, Abe.
Thanks very much, Saul. So just to finish off, you don't just need to listen to us. William Barry, the Managing Director of Arch Emerging Market Partners, says that we're thrilled to partner with Sun Exchange. We are an emerging and enabling force in the imminent global energy and economic transformation. You can be too, and we're excited to share that journey with you. So we're now open to questions. Thank you.
And Vusi is with us. Good to see you, Vusi.
Thank you, Squire. I appreciate it. Thanks. Thank you for having me. Hey, Rob.
So I'm going to shoot the first question, and then we're going to let Vusi come in with the difficult ones. So Abraham,
Yes.
You have to kind of walk through the business model again. How do you actually make money? Where is your margin? Is it recurring revenue, or you have to kind of just go through us again? How do you actually make money?
Great question. We deliberately didn't go into it because it's probably the most interesting area about our business model. I'm going to let Saul Wainwright, our CFO, answer that question.
So yeah, we have 2 revenue sources. We make revenue on the upfront development cost of the project. So it's an EPC plus our margin. So we sell the project at the total inclusive cost, the amount of solar cells that are used in the project divided by the total amount of value that the project gets you to a per cell price. We make a margin on that sale. And then there is a 20-year revenue stream that comes out of each project, and we take between 20 and 25% of that revenue stream. It's a turnkey type solution, so that 20 to 25% covers our insurance, maintenance and operations and replacement. So we build up certain reserves for each plant, and that runs through the 20-year span. So there are 2 revenue streams. The margins on that, well, I said 20. Oh, sorry, maybe I didn't say the margins. So typically it's about 20% margin on each one of our projects, and then 20 to 25% of that revenue stream.
Okay, and the follow-on questions. So I'm an investor. I'm putting in R1 million into your platform. How does my revenue stream look for going forward? When do I get the payment and see something?
Just to be explicitly clear, Hans, the opportunity at convertible note, it's got nothing to do with the utilization of our platform.
No. I'm not talking about the note. I'm talking about being a customer of your platform. So I'm not talking about investing.
Perfect. We're on the same page. So if you are a Sun Exchange platform user, you will purchase a solar panel in units of around $5, and you will earn between a 10 and 15% internal rate of return, depending on the project you are leasing your solar panels to. Each project has got a different yield in terms of solar energy value, amount of solar energy that's going to be produced, and slightly different terms on the escalation of the lease involved. But each project is different. But we do usually average around a 12% internal rate of return.
Okay. Rob,
can I ask a question on installation, upgrades, maintenance? You're dealing with hardware here. How does that all handled? And then the second question is insurance.
Cool. So it's the solar hardware. Most of the time, the inverters are guaranteed so have a warranty of 10 years, and the replacement, there's a maintenance reserve being built for each one of our projects out of the gross revenues of each project to build a maintenance reserve. So within the first 10 years, if there's an equipment swap out, it's covered by the warranty. After 10 years, we've built a maintenance reserve for the project to replace
Who
the
does
equipment.
it though? Who does installation and maintenance? Who's responsible?
We do not do any installations. We have a network of solar installers that cover the whole continent who outsource all the installation work to.
And how many kilowatts minimum up to what?
So the smallest project we've done was our first project was 15 kilowatts. And the biggest project we've done is the one for Nimberfresh right now. That's 500 kilowatts with 1 megawatt hour of battery storage. So the actual value of the plants now are orders of.
So Vusi and Hans live in very big houses. How many kilowatts on average would they require for their house?
It depends how big their house is. I mean, really, we don't do this. Is like outside of residential scale. We're talking commercial, industrial scale solar plants. So right now,
just to give people an idea,
one household is probably about 4 kilowatts, and we're doing systems up to 1,000 kilowatts.
Okay, so Hans and Vusi must be 20 to 30 kilowatts.
We'll do their.
They could theoretically go solar through Sun Exchange. We just need to check their energy load profile.
Vusi, over to you. You're mute.
All right, I've unmuted myself. Thanks for that. And Rob, I'm quite offended that you've stolen my dress code for this, although I think it looks better on me than it does on you. Lads, great presentation. And just let me say, well done on your successes so far. It's very encouraging to see businesses operating in this environment that have delivered the kind of performance over the period that we've just come through, the likes of which you have delivered. So, for me, just Stokes, well done, guys. I want to understand a little bit about your unit economics and your sales process. So you're talking about growing into new markets. I want to understand if national culture has anything to do with how people buy in those markets. But I also just want to understand, so how do you sell your business, and what are the unit economics around which your business is built?
Okay, so firstly, accessing new markets is predominantly unique. Not unique, it's uniform in all new markets, because we're dealing direct with private energy consumers, and everyone works in kilowatt hours and a price per kilowatt hour. And that's really what we're selling as a lease contract for a solar plant at a lower price per kilowatt hour than their alternative. And solar installation companies across the continent, they all need finance products to offer to their clients. And Sun Exchange reaches new clients by working through installation companies. We also get contacted directly by energy consumers. And so typically we'll work with organizations and brands. So for example, Spar supermarkets, we're solar powering across even Namibia now with Spar supermarkets. So they will contact us. We already have a boilerplate lease agreement, which is industry standard, and they'll enter into that. So it's relatively easy. The regulations around solar leasing are pretty much universal. On the unit economics side, we break down the solar power plant into a price per solar cell, and we're actually selling the solar cells, which is like literally the sun-facing part of the solar plant that actually produce the electricity. And that's sold to a global network of our platform users. We've got registered users in 178 countries worldwide. And that's predominantly in the United States, South Africa, Australia, Germany, Netherlands, and some Scandinavian countries. So we truly do have a global footprint of people using our platform to deploy solar panels into Africa.
One other thing I just wanted to add is around the ARPU of those buyers. So we see the average spend of our buyers being about $300. That was last year's average. We've already seen a major increase this year as we put more efforts into our targeted marketing in the US market specifically. So we're seeing almost a doubling in purchasing amounts in the last 2 months and an increased growth. The cost of acquiring those customers is around $40 to $50 a customer.
Rob?
Yeah, so for the audience, you've got ARC Capital in for $1 million. That's Patrice Motsepi's investment company. Yeah, so in for $2 million. So well done. They're savvy guys and they love fintech. My question relates to the Bitcoin side. Where the Bitcoin held, and how secure is your site?
Yeah, so we're currently hosting the Bitcoin off chain, so it's in a hard wallet in cold storage. Our platform is currently integrated with Luno for the actual exchanges, but we are moving to a third-party custodial wallet service with a. I'll pass it over to you to explain.
Yeah, so we're moving to a US custodial service, most likely a firm called Prime Trust, which will then add an additional layer of security and remove the regulatory compliance from us. One thing we really want to avoid is having to be regulatorily managed in the fintech space where we're holding people's money. So we're working actively on removing that. Also, the important thing to understand about the way our company utilizes Bitcoin is we as a company are in no way exposed to the Bitcoin. When somebody sends us a Bitcoin to purchase something, we sell that Bitcoin immediately and convert it into national currency. So there's no exposure. The only people really that are exposed are our buyers, and that's by choice. They've chosen to buy in Bitcoin.
And where's your IP held?
The IP is held in our Delaware corporation. So in terms of structure, we've got a US Delaware corp that's the 100% owner of us.
So Lauren asked a question here. Who would be your ideal partner when it comes to financing? I mean, you mentioned $300 here. It sounds like you're almost a retail bank. Wouldn't you like to go for bigger checks from investors that are hunting down for annuities?
Yes, absolutely. And what we're trying to do is balance that against our community aspect, where we really do want to encourage and empower individuals to participate in the alternative energy revolution, right? To be part of that. But we are going after bigger partners. One of them is a firm called Energia, which we are in the final stages of negotiating the finer details of a deal with them, but they've already committed to spending $5 million through their platform. So we're looking for partners like that, which give us a guaranteed kind of revenue flow. So we know 5 million is coming from them, and we will fill the gap with all our smaller buyers.
I mean, basically, there's almost unlimited access to commercial energy projects across the continent. It's more about, and there's also almost unlimited access, unlimited capital that wants to be deployed into clean energy. So what Sonic Exchange is that portal that connects the two parties together. And we are the peer-to-peer leasing platform, and we're not a bank. We're not a fund. We're just an infrastructure platform that connects these two stakeholders together, and we make money in both directions.
So if I were to invest as a consumer retail, I would actually invest into a specific project. I wouldn't invest into a portfolio of solar plants.
No, there's actually a two-stage transaction. You make your purchase of your solar cell, and then you're then opting into leasing it to that project of your choice. You can, if you want to, physically receive your solar panel and forego it being leased, but no one has taken up that because it would make no sense. But it is an option. And then so you're in a completely transparent way choosing who to solar power. And so you can build up your own portfolio if you wish to.
Can I trade my holdings? Do you have an exchange? Do you have a stock exchange of the shares or certificates?
No, that was not the intention of the platform, to have a secondary market. The idea is there's an alternative to putting solar panels on the roof of your own home, which is obviously a long-term commitment. So because this is not a financial product, it's a hardware product. You are entering into a 20-year lease. Now, theoretically, as the owner of that asset, you can transfer ownership to somebody else. But we have not yet built a secondary market platform to facilitate that transaction. But it is possible.
Private individuals can definitely make that sale on their own and notify us of that change.
I'm curious about what was happening in your lives that you came up with this, and maybe just the backstory about the two of you. And I mean, look, there's just so many. I don't know about you, Rob, but I get the sense that there's so many pieces of this coming together into one thing. I'm wondering how strong the strain was of the marijuana that you were having when you came up with this. And so I suppose the question is, what
What's
about
in
yourselves?
the thing you're drinking? What's in the thing you're drinking?
Well, okay. So, right. So my background is actually in climate change science, and I kind of deviated from climate change science and started working on solutions because it became very clear during my master's degree that the solution for business is changing your energy source. That was really it. Change your energy source, and you've solved the major source of emissions. And then I set up a solar installation company in the UK in 2007. So I was selling very expensive solar panels into a country with no sun, and I made a business work. But the UK government then subsequently changed. They threw a curveball in the industry. The industry collapsed, and I moved to South Africa to seek a place where there is a demand for solar, where it works without any policy intervention from a government. Like solar works its own merits here without any government support. Now, at the same time, I started to send money back to the UK using Bitcoin because it was faster and cheaper and much more simple for me to do that than queue up outside Nedbank with handwritten forms to send money. And then the penny dropped. It's like, wow, if we can connect these two things of allowing people around the world to own solar panels in South Africa using Bitcoin as a payment system, that's two huge problems solved. People around the world want to invest in solar with people in South Africa that need access to solar. Saul, I was introduced to by mutual friends from multiple directions, and just almost like by fate, bumped into each other one evening in a coffee shop. Not that kind of coffee shop. And,
in Cape Town. And
anyway.
Yeah, and I spent the
We have a couple of questions from Anthony here. He asks how many defaults on the off-taker side to date since 2014? I must say that question I don't understand, but you probably do.
Yeah, he's meaning how many people have not been able to pay their lease payments, and the answer is 0. For the simple reason being that we're solar powering well-run organisations like schools through the Western Cape Education Department, Spar supermarkets, and we always check that our projects are paying their electricity bill in advance. So they've got to be up to date on their electricity bills. We're coming in and we're reducing their electricity bills, so we're kind of increasing their ability to pay. And we've had 0 defaults. But ultimately, if an energy consumer defaults on their lease, the solar asset still exists. It still is there, and it can be leased to somebody else, and it can actually be deconstructed and redeployed.
So I mean, I agree with you. I mean, it's, you want to have your electricity running. We know that as South Africans, right? But what happened if you go bankrupt? What happened if Sun Exchange go bust? You go smoking and you travel around the world, and what happens to the assets?
So
are they secured? Are they?
Yeah, so the better part of the last year and a half, working with Arch, who came in our Series A at $3 million, who are now going into the convertible note with another $2 million. Part of that was really a growing up moment, and where we restructured the company, and that's been the focus for me for the past year. And what we've done is we've created a trust, a Bevind trust, that actually holds all of the assets, which are completely separate from the company itself. There are third-party trustees as well as a couple of the executives here. So if Sun Exchange goes bankrupt tomorrow, your assets are completely protected and separate from the company. There's no way for those creditors to go after those assets, and the independent trustees will take over the running of that trust and meet the trustees' requirements.
And crucially, the solar projects themselves are profitable in their own right. So the net cash flows to the solar panel owners, that's net of the operating costs, insurance costs, maintenance reserve, and servicing costs of the project. So if Sun Exchange ceases to exist, somebody else can step in and benefit from taking those fees which are available to certain servicing the plants.
Abraham, we're running out of time. I'm going to give you 30 seconds to again tell us how much you're raising.
So this is a $3 million convertible note, but of which $2 million has already been committed. So there's $1 million available into the convertible note, which will give you a 17.5% discount on our Series B within the next 6 to 9 months. And that'll be a $10 million round, and get involved. This is your last chance.
Great. Thank you very much, Saul and Abraham. Really appreciate it. Great presentation.
Thank you so much, guys.
Thank you.
Bye-bye.
So
And
now,
someone who's been on Lion Cage before.
yes,
Yeah.
Jessica is coming on. Hi, Jessica.
Hello, good evening.
Fresh.
Welcome back.
Thank you.
Deliveroo is going public in London end of this month at a valuation of 10 billion euros.
Exactly.
That's what you're going to talk about, right?
Lots
Yes.
happening online. Shall I just take it away?
Yeah, you should just go and take your presentation and run, and then we come back.
Yeah. Here we go. Hope that's visible. So, hi, I'm Jessica. I'm the CEO and founder of YeboFresh. YeboFresh is an online grocery shopping platform dedicated to townships, South Africa's only online grocery shopping platform dedicated to that market. We have seen tremendous growth since we started. We're only 2.5 years old. And indeed, we were on Lion Cage last year. In fact, we more than doubled in valuation since that moment. So very happy to be back again. This year, we are really going big and we're looking for a 2-step fundraise. Initially, quite soon, a bridge round, which will be a convertible note. We're asking for 8 to 10 million rand, of which 5 million rand is already committed. So we've got 3 to 5 million rand open on that. And later this year, we'll be looking to raise about 40 million rand. Yeah, you just mentioned Deliveroo, and of course, everywhere.
Sorry, Jessica, we can't see your slides.
You can't see the slides.
No,
Okay,
it just says
sorry about
exit people screen. There we go. Thank you.
Okay, sorry. Let me just go back here. Is that all right? Yeah.
Yeah, that's better.
So upper market booming in terms of online. I'm a retailer by background, came to South Africa 5 years ago from the Dutch retail upper market as a background. And I saw there how this massive transformation was happening. And in South Africa, of course, there's these two South Africas, basically. The upper market, which is very much like the market I'd seen and worked in Holland, with this massive online revolution happening very fast, and particularly last year. And on the other side, the mass market, actually the biggest part of our population, which is still a significant part of the grocery, FMCG market, 160 billion rand estimated, completely unseen, completely underserved, and completely untapped. So massive opportunity. And why is that so important? And why is there such a gap and such an opportunity? If you look at the typical township shopper, the mother, let's say, she's got two options to get her groceries. The first one would be to go and buy her products at the Spaza. Now, the product at the Spaza will have typically traveled from a supplier to a wholesaler, to a midi wholesaler, often to a Spazarette, to a Spaza, to the consumer. And you can imagine how that is a complex chain that adds a lot of noise, a lot of waste, and also lack of transparency on what is happening with that product, how it is marketed, how it is priced. The alternative for her would be to travel to a retail store, which is often on the other side of the township or outside of the township. She's going to pay for taxi. She's going to stand in line. She's going to queue up for a long time, often to find that the product is sold out, and then traveling back in that taxi and paying for those costs. And this is typically what this looks like. This is not the shopping trip that we are used to. This is the shopping trip that is hours and hours of waiting. Of course, this was even worse during COVID-19, which explains why we've grown so fast in the past period. But even during a regular month-end shopping at the moment, you'll be dealing with hours and hours of waiting, then traveling back in that overcrowded taxi, including the health risk, the safety risk, and the cost of that shopping trip. So in comes YeboFresh. Very simple model. We take an order, and we take it in any way that works for this specific shopper. Whether it's via Facebook, whether it's a phone call, whether it's WhatsApp, a WhatsApp bot or a WhatsApp chat, it will be in her own language, or whether the shopper wants to buy via the website. The order will be digitized. From there on, we source directly from the manufacturer in bulk, large volumes, to make sure that we get the lowest possible prices. We pack in our warehouse. We've got one Cape Town warehouse. Actually, we've gone from small warehouse to bigger warehouse to bigger warehouse. And we'll be opening our Johannesburg warehouse very, very soon, just preparing to do that. Last stage will be delivery within 24 hours to the customer's doorstep. And she can pay at that moment, which is very important often for the customer who doesn't have experience with online shopping and doesn't understand this point of, hey, why would I give away my money if I don't know if you even show up? We do not do this just for consumers. Actually, in fact, we've got a diversified stream of customers. The biggest one for us is the NGOs and the ECDs and the schools. These operate in a way that basically provides us with the rocks of our sales. They are large umbrella organizations which require us to deliver to a large number of sites, whether these are indeed ECDs or schools or soup kitchens. These are gigantic volumes that we're dealing with, and we're really a problem solver for them. We take away all the pain, all the hassle of having to go to a ShopRite or a Macro, fill up the trolley, and then pack at some kind of school in the background. We will take care of that. Then the township food businesses. So I just mentioned this, the chain towards the shopper, of which the Spaza is an incredibly important aspect. We have just recently started servicing Spazas, and this is our fastest growing segment. So we've got about 350 sites registered, and we're getting really high growth on that segment. And then we've got the township consumer, the family I just talked about. At the moment, struggling, really struggling, which is why the NGOs and the ECDs, that channel is really important to basically help the struggling economy in that sense. But we're still seeing good growth in that segment. And interestingly, these rocks, pebbles, and sands, in that order, really provide a very stable production to us. And the three segments are extremely compatible. They buy the same products, they have similar demand, we deliver into similar areas, and they allow us to plan and optimize our chain. So this works, and it really works. Why does it work? According to Gigi Alcock, township economy expert, this is the future of township retail. And of course, we believe that. Why? We're taking away so much pain and putting in place a really smooth working model. We take away the safety risk, the transport, the queues, and we put something in place that is healthier, that's easier, and that creates excitement, because shopping online and getting gifts, I'll tell more about that later, with every shop is really exciting. For our partners, we create visibility. That unseen market all of a sudden becomes visible because we can know and track exactly where we deliver, and we know what the price of the product was, and we know what other patterns these customers have shown. So we've got lots of insights all of a sudden. We're basically ripping away the veil of that market, and we're the first to do it in that way. And then for society, our model is extremely efficient. We're operating on almost zero waste at the moment. Very soon, we're planning to be waste negative by basically removing waste out of the townships with our empty trucks going back. We're taking away unnecessary transport movement, and we're creating jobs. This year, 40 jobs created in the townships that we operate. Results to date, we're 2.5 years old, as mentioned. We've grown between the first year and the second year of operating. 32x, saved 7,000 by now more taxi trips, delivered food parcels, 90,000, 100,000, created jobs, almost zero net waste. We've won quite a few grants, very, very grateful and happy with that. We're chosen as one of South Africa's top 5 most exciting startups last year. Very quick word on Spazas, the segment that's growing the fastest. I just mentioned that. Systematically mapping the Spazas that we deal with against something that hasn't been done in that way before. Our FMCG partners are very excited about the way we do that as well, finding out who are these Spazas, how do they operate, what do they need. And we just earned a grant from JP Morgan and BFA Global to further work with that market. Also partnering with Celpal, who's got a network of 8,000 Spazas. And as we're preparing to go to Joburg, where they're active, of course, this will generate a huge opportunity, a huge access to further develop that market. FMCG partners, incredibly important. They are suppliers, but they're more than that. And they're looking at us with great excitement because, again, we provide access to a market that to date has been intransparent. And the only way to basically work with that market is to either work with a big retailer or to supply to a wholesaler who doesn't give these insights. So we're actually getting paid for providing services like sampling to a customer. We're providing branded pages, website listing, logistics solutions. This has just started, but we're getting really good responses from the big FMCGs. And besides, of course, getting lower prices, which will allow us to provide an even better offering to our customers. Quick example of a branded page that we're just building. Very soon we'll have a wider platform. So FMCGs come to us and say, hey, I want to market my product. How do I get access to the township? And we'll provide them with a whole suite of information and a whole suite of services that will allow them to sample, deliver, market, and basically go online towards a township market. Very exciting times for us. I mean, so much happening, and this year is again a next step in our very rapid growth. We are launching in Gauteng, as mentioned, preparing, opening our warehouse very, very soon, and also really investing deep into tech. Not just tech that will make us more efficient, that will allow us to track further what we're doing, but also in particular this year, investing into systems that will allow to create an unbeatable offer for customers. We are talking about loyalty offerings, electronic wallets, social shopping services, and really a wide range of services that will allow us to do things that are at the moment very successful, for example, in the Asian market, but unseen yet in the South African market. And we're doing that for the township market. We're at the beginning of what we believe is an incredibly fast and exciting growth. We see the biggest growth in the longer term happening in the B2C market. We are starting off with that solid base that we have, and that's very easy to convert in the B2B market, mostly kitchens and spazas. In the longer term, we believe that the B2C is the true opportunity, but we see that kicking in a little bit later. In terms of areas, starting off in the Western Cape, but we're talking Gauteng is a market that is 3 to 5 times as big, and KwaZulu-Natal also a huge opportunity. So in the long run, we see those 3 areas and potentially even more coming on board. So in summary, fundraising this year to make all of that exciting stuff happening. We are at the moment starting, or actually almost closing, our bridge round. Our current lead investor has already committed the majority of the ask that we're looking for. So 5 million of the 8 million rand that we're originally looking for has already been committed. We are talking to a lot of investors, getting really good interest, and we are able to extend that bridge to about 10 million. So we can accommodate another 3 to 5 million rand at this very moment, which will most likely be a convertible note against a bigger raise we'll be doing end of this year at about 40 million rand. We expect our valuation to move very, very fast. As mentioned, we've almost doubled against last year. We expect with the spaza growth, with this growth that we're seeing in the segments that we're currently attacking aggressively, to be growing very, very fast in the next period. I'll pause at that because I've talked a lot and I'm sure there'll be many questions.
Jessica, fantastic story. I love it. Well executed. So your management team, are they up to it? Where is your bottlenecks when it comes to growing the company? Or is it finding the right co-workers or products? Or where is your bottlenecks?
We are doing a lot of things at the same time. I think that's mainly it. We've got a very strong management team by now, attracted some stars out of the market. Very strong CFO, very strong COO. So we're building and we're growing. So I think the biggest bottleneck at the moment is doing all of that in parallel while we're fundraising, which is one of the reasons why we're not going for a big raise at the moment. We're really needing to divide our attention between just building stuff and talking about it and getting people to join us on that ride. So that is one of the big points. Other than that, there's always the typical challenges that happen in a food market and a township market. I mean, both are complex. Food is difficult. It has low margins. It requires big volume, temperature sensitive, price sensitive. So that's tricky. And then we've got a township market, which is new. We can't follow someone else's road. It hasn't been done before. So we are constantly learning, evaluating, changing. We need to constantly be agile about what we do. And that means that a lot of opportunities arise, but we also have to make sure we stay on track. So it is that balance between another opportunity, another potential partnership, another offering, and saying, attractive, but no, let's just stay on track. Let's just do this one thing that we're committed to doing right now.
Right.
Yeah.
Fantastic. I'm going to hand over to Rob and Vusi to shoot some questions.
Yeah, I'll go first. Thanks, Hans, and thanks, Rob, for giving way. Jess, congratulations on your success so far. Well done to you and the team. I understand the food sector very, very well. I spent close to a decade of my life working in that environment. It's a tough game. It's low margins. Customers are demanding. The competition is unbelievable. And at the end of the day, a can of baked beans is a can of baked beans. What it is I'm trying to understand here is, beyond the high level, if you could maybe in a single sentence summarize for me what you think your distinct and unique value proposition is the first question. And then the second question is, I want to understand at a strategic level where you think the threats are for your business in the short and the medium term.
Yeah, thank you, Vusi. I'll start with the first one. So the distinct and unique value proposition really is that we're attacking a market that nobody really understands. And it sounds, maybe, let's give an example. I came from the upper market kind of online retail. I had many, many years of online retail in an upper market under my belt. And I thought, I can crack this market. I went in and I had to unlearn everything I knew and redo it differently. Because everything from order taking to assortment to delivery is different. So the unique value proposition that we have, and that's very attractive to our partner, is that we're going into a market that is indeed incredibly tough. But that, unlike anybody else, we're understanding how it works. And we're offering a way of shopping that wouldn't work for, let's say, a Checker 6060. We're offering a price point that is unbeatable, that is hyper efficient, based on our hyper efficient chain. So everything we do is geared towards what this specific customer wants and needs. Yeah, that's a very high level. I could break it down into further elements.
If I can, I just want to make sure that I understand the details here, the granular details. So clearly you're dealing with a market that is price sensitive, which means you've got to have an exit price that's attractive. You're also dealing with a market that is not brand loyal. This is my experience. So what I'm trying to understand is why they're buying from you. How are you making your margins? And why are they not buying from, I think you understand the point that I'm trying to drive at. Why you, and at the end of the day, you're building a machinery here, and there's got to be a way for that machinery to sustain itself. So, what's the commercials? Is it price plus? Are you taking a margin on top? Are you earning a rebate? How have you built the commercial model around the business?
I'm just going to share very quickly my screen with you, because I think that will. I've got a slide here with the business model. Well, the business model is basically, in essence, is buying and selling, like any retailer. And we have got different margins when we talk about different segments. So, for example, our spas and margins will be much lower than the ones on the consumer. But then the model is simpler, because those spas will be buying from a very, very select number of products and very repetitive in bills, where the consumer wants very specifically one bottle of this and one can of that. So we're taking a 12 to 22% margin on the food that we buy and sell. Then we pick, pack, and deliver. And again, we have to do that hyper efficiently. And as opposed to many retailers who are now moving towards very rapid delivery, faster, everything at arm's length, we are really focusing on price and efficiency. So we have 24-hour delivery, not next day delivery. But we do that in a hyper efficient way. We do not deliver on a motorcycle. We deliver truckloads, 8-ton trucks that go into a township, drive past an ECD, then drive past a school, and then deliver to a consumer. So that allows us to actually, these unit economics that are required to operate at scale, we're very, very nearly there. At the moment, these GPs are what we make. The last mile delivery are actually the percentages that we're at already. Now, of course, at the moment, we're not still making money yet, because we're investing in growth. I'm not sure, Vusi, whether that answers your questions, but this is basically the essence of the business model.
You're making 18%.
Yeah.
In food.
GP.
Holy shit. Sorry, Hans.
So I think there's a couple of things that are very interesting here, and we also have some questions from the audience. Your marketing costs. So your customer acquisition cost. What is it? Is it word of mouth and also the repetitive nature of your business? Those two. You just expand on those.
Yeah, at the moment, I must say that marketing percentage is the one that is different at the moment. NGOs, it's basically zero. We've got NGOs telling each other and saying, you need this, they're going to save your life. And so that is actually a growth that is almost entirely organic. Spazas, we're talking feet on the ground. So sales team that is recording very carefully. You just saw that mapping that we're doing, very carefully recording. These are the Spazas that we talk to and doing research as they go. So that's quite a high cost of acquisition, you can imagine. For consumers, mainly the sales that we're currently getting is word of mouth, and it is online marketing. So it would be Facebook ads, a little bit of Twitter. We are really investing in consumer growth for the first time properly, going to Gauteng. So that will be quite exciting to see what we get there. At the moment, the consumer market, as mentioned, is really struggling in the Western Cape. So we've got nice kind of organic growth, but we're not properly investing there.
Rob?
Yes. Who are you competing with? So when you go, for example, to Gauteng, whose business are you taking away? Because you can't be just increasing business.
No, it will mainly be the shopping malls when we talk about consumers. So we're talking the ShopRites, the Pick n Pays, the local Goal, the Boxer, those shops that we'll be competing with when it comes to consumers. When it comes to Spazas, we're competing against the wholesalers. Example, talking to Celpel, again, that network of 8,000 Spazas, they've got a whole network of wholesalers on their platform. None of them delivers. So traditionally, a Spaza would have to close shop, travel to a wholesaler, stock up, and travel back. That's 3 to 4 hours of valuable trading time that we're now basically replacing.
Is there a wholesaler that you could buy or team up with that gives you scale, or none of them have real scale?
Could be. We are buying from some wholesalers, but by now we're at the scale where we can basically bypass them. We buy directly from Unilever, Tiger Brands, Premier, Pioneer. And as mentioned, they're actually paying us to not just provide their products, but add extra products and sample products. So they would pay us to go, hey, add my Coca-Cola, add my Cappy products, add my new, I want to sample this porridge. Add the products, we get something to give away for the customer benefits, and we get paid for it.
Have you been approached yet by ShopRite or Pick n Pay to buy you?
They are following us very closely. They are
Nervously.
Yeah, it's too early. We believe that we first really need to make a mark. But believe you me, this is of course the way for them. And I mean, just Pick n Pay has acquired bottles. Woolies is going Quench. They can't do it themselves. They'll be looking at a party like us. So this is a very likely exit for us. But for now, we are having way too much fun and doing it ourselves. So we'll be doing it for quite a while.
So Luther has a good question here. How do you process transaction from unbanked individuals? How do you get paid?
Actually, surprisingly, a lot of township customers are banked in some way or another. For example, even a SASA grant, you have to have a bank account to get it. So a lot of our transactions are payment by card, but upon delivery because of that trust issue that I mentioned earlier. We also take cash, and this is in particularly important for Spazas. So that's again something else that is unique in the way we handle this process. We've got a safe process for handling cash. Of course, we'd like to avoid that altogether, but it's not possible. In the township environment, you're going to have to be set up. So we're talking to a range of fintech partners that will allow us to work on solutions on that, which will be safer for both the Spaza owner, the customer, and us. But at the moment, we are set up to handle cash. We have had a couple of incidents, but they are really negligible. If you look at the thousands and thousands of deliveries we've done, less than 5 incidents to date.
Busi? Have you sensed your the margin of 18%?
My flabber is gasted. I mean, 18. To put it in context, Hans, 18% GP. You talk to any of the large retailers, they're doing anything between 3 to 6, and that's if they have got great arrangements. What they really hope to get the money off the back of is the rebate. So I'm not sure if that 18% includes the rebate arrangements, especially if you're talking directly to the suppliers and producers of those products. But listen, kudos to you and well done to you. This is, I've got to tell you, I think it's an exciting business. I think and the sweet spot that you hit here is you're selling a commodity in an economy that's not growing, where the largest players are all looking for growth. And that only presents so many opportunities, right? And what you've managed to do is to tap an untapped market because it's been too difficult to tap, frankly, right? That's kind of why, I understand the space you're in. It was left to those kind of grimy, old cash and carry operators, the general dealers in the townships. That's really who played in that space. And I think, too, the way you put it, to make visible the invisible, kudos to you. Honestly, well done. And I think you and your team are doing great work. 18%. Yes.
GP, not EBIT, but yeah. So and we're managing to really compete against those players. If you spend a basket at ShopRite or you spend it at Yebo Fresh, same amount, Yebo Fresh will deliver to you. And of course we have to work hard to maintain those efficiencies. One last thing I wanted to mention, Vusi, because you talk about that untapped market, and for me that is so exciting because we really get to do things differently. We get to look at, for example, what has happened in India with the Kirana stores, what has happened in Kenya with Copia Global. These are different models than what a typical Ocado does that we can copy to, we can copy Instacart to the South African upper market. But this market is different. So we'll be looking at different countries, and we'll be looking at what is uniquely South African, and developing and launching a whole range of services and offers that are really unique to this market, and that we'll believe will be incredibly exciting and will really make a difference. So we're not just looking to do what Pick n Pay does, but do it for the township market. This is different. We need to do social shopping. We need to help customers with their budget. We need to help them save. We need to launch loyalty programs that really work for this market. All of these are in development. I'm very happy to tell investors who want to come on board more about that. And we're really looking at this round, not just for capital, but for smart capital. People who are wanting to come on board and will help us to really revolutionize this market. And I just want to emphasize that we've got capital, we can get capital. We're really looking for specific partners who have got that intelligence, that experience, and that appetite to do something different that has never been done before in South Africa.
Jessica, that was a great end note from you. Fantastic presentation, and I love your energy and what you're doing. It's great from many aspects. Thank you very, very much. Rob, do you want to take the end?
Thank you. Well, once again, Hans, thank you very much. Vusi, you're a real star here, and you do look a hell of a lot better than me in these shirts. I might have to go and change. Yebo Fresh is also a great name. It's a bit better than ShopRite and Pick n Pay, I have to say. So thanks everyone for being on the Lion Cage. 2 great companies, a big success. We're in under the hour. See you next week. Roll the credits, Lauren. Thank you.